What's going on, guys? Today we are going to be going over one of my favorite stocks. I am long this stock. It is one of the largest positions in my portfolio, and that is Meta Platforms. We are actually going to go over where the stock is kind of sitting at right now. We're going to take a look at something that's important that a lot of people forget during these times, and that is repurchases. A lot of these big companies have a lot of money on their balance sheet, and we're going to take a look at repurchases and how they're going to affect stocks like Meta, Apple, anything like that. And then we are going to go over basically a prediction using the PE ratio of where Meta stock price could be headed in the future. And then finally take a look at where analysts think Meta stock price could be headed in the future. So if you enjoyed the video, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. So first up, let's just take a look at Meta's chart. So they have had a interesting week. So they are actually up quite a bit. Actually on the week, they're only up 1%, but in the last day, they spiked up almost 5%. So you can see 4.37% over the last month, down 5%, over the last 6 months, down 13.35%. And then over the last year, what we have seen is, right, Meta was trading around this 300, 325, 350 kind of range. And then all of a sudden they had something happen in here. And if you remember back in this time, this was their Q1, I believe, earnings that basically came out, and they had their first year-over-year decline in revenue, and people ran for the hills. The stock went from $320 all the way down to $220 basically within a day. And that is an absolutely insane move, again, coming on the back of this news. But remember, also at that time, right, there was a lot of economic concerns with inflation. The Ukraine-Russia situation had just started. So a lot of things going on at that time in the stock market that also affected this move. And then since then, the stock has just continued to bleed off. A lot of investors getting out, right? It fell all the way down and then kind of spiked up, and then it's kind of continued to fall throughout the year as there's been a lot of more concerns about inflation, what's going to happen with interest rates, things like that, how that's going to affect Meta, because Meta has kind of transitioned. They've done something that's been very weird, right? They have gone from, almost a safe kind of stable stock for the most part, right? They've kind of continued to move up. They've had a very safe business model that has been very clear and obvious that they're, focusing on advertising to the people that use their platforms, to more of a growth company, right? They've shifted their focus onto the metaverse. And that has kind of concerned a lot of investors, right? Because a lot of investors saw the company as being, safe, and, they're going through a transition almost backward. Normally you see companies go from a growth-based, investor base to, a safe-based investor base. And they've kind of gone the opposite. They've gone from, a safe investor base to more looking for growth investors to get into the stock. So it's obviously, hurt the stock a lot. And in my opinion, it's at a great value down where it's at right now. And I pulled up this article here that kind of goes over some of the details of, what's happened with Meta over the last year and what's really been going on, right? Obviously, TikTok has been a big competitor for them over the last years. People have, started to use that platform a lot. And what people, think is, they're taking eyes off of Facebook and Instagram. In my opinion, it's only growing social media. If people are on their phones, it doesn't really matter. If someone's, on TikTok, they're going to scroll through TikTok for a little bit, then they'll get bored, then they'll switch over to Facebook for a little bit, and then they'll get bored, and then they'll switch over to Instagram for a little bit, and transition between the two. Obviously, if TikTok's the first app that people are opening on their phone, then maybe they're spending the most amount of time on that one and then just glancing through a couple of the other ones. And obviously that's going to affect Meta as time goes on. But TikTok is kind of one of those trendy apps where we saw something similar with Snapchat, we saw something similar with Twitter, and each time Facebook Meta has been able to react and kind of move on their feet to position themselves to regain a lot of users' attention. So overall, not really concerned with that in my opinion. There's also the Apple privacy changes. So basically, users can now define if they want to allow apps to collect their data, and Apple has kind of implemented that, and that's had a huge effect on Meta's business. Overall, I think they estimated that would have a negative effect on their revenue of around $10 billion, which is obviously is a significant amount. And then on top of all that, right, we have economic concerns all happening. But something that people, again, always forget during these times, right? There's a lot of negative things going on in the market, but a lot of these companies, Meta, Amazon, Apple, Google, all these big companies that have huge balance sheets, They are spending a lot of their time when the stock goes down and falls through the floor repurchasing shares. And this has a huge effect on the PE ratio, because basically what they're doing by repurchasing shares is they are in turn increasing your ownership in the business, right? If you owned, a certain portion of Meta and then they repurchase $10 billion worth of shares, now you own a larger portion of that company because there are less shares out there on the market. So that is important to remember. And what we have seen is they've repurchased almost $15 billion worth of shares so far alone in 2022. And that $14.7 billion, almost $15 billion, is only in 2022. So what we can see is here in Q1, they spent almost $10 billion on stock repurchases. And then Q2, they spent $5 billion on stock repurchases. But what's a little bit concerning are these numbers in Q2, 3, and 4 of 2021. So they spent $7 billion in Q2. In Q3, they spent $14.4 billion. And then in Q4, they spent $20 billion. And if we jump back over to the stock chart, we can see here that, right, the last part of last year of 2021, we saw the stock price at very high levels, right? All-time highs of, around $370, $380. And then in Q1, we saw the stock drop through the floor. In terms of like repurchasing, what you really want to see from a company is the same thing you would think as an investor, right? You want to buy low and sell high. But here, what Meta has kind of gotten themselves into a situation doing is they've actually been repurchasing a lot of shares at very high prices. So again, we see that in Q3, Q4, they've spent almost $35 billion in repurchases at very high stock prices. And they've kind of actually tapered off in Q1 and Q2 of 2022, when we would really like to see them ramping up, right? Because the stock price fell through the floor, and it would be good to see Meta actually repurchase more shares, gain back a larger portion of their company, take a lot more shares off the market, which in turn would increase, shareholder value of Meta. And that's kind of what this article gets into, talking about is that, they have actually been repurchasing at very high prices, when in reality, what you want them to see and do is repurchase shares at these lower prices that we're at right now. And then, kind of ramp up if the stock goes lower and ramp down as the stock, goes higher. So a little bit of concern there, but what could be a huge benefit for Meta in the future is if in 2023/2024, maybe early 2024, we see inflation come down and start to decrease over kind of the next 6 months, let's say. And then in early 2023 or mid 2023, the Fed can be in a better position. And if they are in a better position where inflation has started to decrease, what the Fed can start doing is start finding a sweet spot for interest rates. They can maybe decrease them a little bit. If they see, that inflation is still a little bit of a problem, they can increase them by smaller margins than people would expect. But right now, it's just been, everything has been, a 0.5 to 100 basis point increase in interest rates. And that is kind of concerning, especially for companies like Meta, like I mentioned earlier, who have kind of transitioned back into a growth type of company. PE ratio is a very easy metric to look at, and here we have the PE ratio listed on Yahoo Finance, and it is around 13.3, both for the trailing and the forward PE ratio. The forward PE ratio means a little bit more to me personally, but what we could see is it's decreased continually as the stock has continued to fall. What's huge is, again, as Meta repurchases their shares, what we should see is basically this number fall even further, because basically the outstanding number of shares that their earnings is distributed against is lower and lower. So that will increase their earnings per share artificially, so the bottom of the equation, and their price, as long as their price stays low, basically, or the same, their PE ratio will continue to fall. So that is something huge, right? You can basically get shares of Meta at a 13.3 PE ratio, which is insanely low, especially when you think about the company being around like a 35 PE ratio just a year and a half, kind of 2 years ago. And we can use that PE ratio to determine what a fair value might be for Meta. And what we can see right now, what I have filled in here is $169.15. That's where the stock is trading at right now. And the current PE ratio we're saying is around a 13.3. Potential PE ratios 25 to 30. And again, that's probably fair. When we look at, the previous year, we can see it was sitting around 23 all the way up to 29. So 25 to 30, not out of the question for Meta stock. So 25 we have right here. If the stock were to go up to a PE ratio of 25, so the stock price increase and its earnings and everything remain the same, we would see the stock value or the stock price to actually increase to $317.95, which would be almost a 90% return. And if we see the stock go to a PE ratio of 30, we would actually see the stock price go up to basically where it was sitting at all-time highs, which would be 125, almost 126% return on your money from where the stock is currently setting. So a lot of upside there in the stock based off, potential PE ratios of where Meta could be headed, in the future if interest rate kind of policies change and if, they start getting back on track in terms of revenue and other things. I don't think any of these are out of the realm of possibility. Last thing up, I want to take a look at what analysts think for Meta stock. And we have 32 analysts saying it's a buy, we have 6 saying it's overweight, we have 14 saying hold, and 1 saying underweight. And overall, we have a high price target of $292, a medium price target of $215, and a low price target of $150, which $150 is actually very close to where it was trading over this last week. It got down into the high 150s, around 158, I believe. And then, there's a lot of upside potential with very little risk, in my opinion, to the downside, according to what these analysts are saying. And then average, we have a $217 price target. So if we look at that average, what that actually comes out to is almost a 30% return. So again, I personally am long the stock. I think that a 30% return, these are generally year over year numbers. So they're saying that, in the next year, they could see the stock getting up to $217. I am kind of thinking, these are more potential if we start seeing interest rates and other things changing, which is probably more at the earliest year and a half to probably 2 years is, more likely for some of these other numbers. And again, that's just my opinion. Personally, I do own the stock, so I am, biased and want the stock to go up because I like the company. Obviously, make decisions for yourself. Look at all the metrics. Look at, the company itself. Do you use Meta on a daily basis? Are you using it on a monthly basis? Do you believe in, the business model and where it's headed in the future? Personally, obviously, I do. So obviously, though, make decisions for yourself. So if you enjoyed the video, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. And as always, guys, have a wonderful rest of your day.